Hey guys, Mike here. So, oh my goodness, man. I tell you what, I haven't seen a day like this in a long time where we're talking about volatility swings today. Huge. I mean, huge swings within a matter of minutes. Okay. It reminded me, I don't know about you, how driven this market is now, right? It's controlled by computers, and in a matter of seconds, some can go up 100%, some can go down 50%. I mean, it's amazing to see it, and I'm going to show you what I'm talking about. Also, we'll actually start off with the one that probably made the most news, but I'm also going to show you some data, because remember, on this channel, it's not just about the market, but it's what's going on behind the scenes in the economy as well, right? And so I ran across this data today, and I'm not surprised by it, because I've been screaming to the rafters that, and you know this as well, there's two different economies, the have-nots and the haves, right? The have-nots have no appreciating assets. The haves have appreciating assets, right? And so you're loving life. Inflation has been good to you because your net worth is worth a lot more and stuff, right? But when you see this data, it surprised me, I guess, how high it is now and as fast as it's gotten there. So that was very surprising. And then we'll go through some other stocks and everything. And again, keeping things in perspective, right? I told you yesterday when there was a big sell-off, I'm like, calm down, look at the charts, set your levels. We've seen this movie. Big red day equals green day, and that's, of course, we start off way higher than we actually ended today if it wasn't for the volatility. So we'll see, was this a lower high set or just another ramp up to continue to move higher, all right? Because I'll tell you right now, right out of the gates, I won't show the chart, but like Nvidia, for example, they're trying to push this thing to 1,000, somewhere in there, and they're trying to do it, seems like, very quickly because, I mean, the call sweeps today were just nonstop, just kept pushing it. And then out of nowhere, here comes, oh, Moody's. Remember, the rating agencies are for sale. Oh, we're going to upgrade their credit rating. Great. That's what they need, another boost, right? And so, of course, the stock goes up even higher for that. So they're definitely pushing this up. My question to you is right at the gates, though, is my prediction for the stock split, which I think they're going to do, is going to be 1,000, probably between 1,000 and 1,100. I'm going to say somewhere between 1,000 and 1,100, right? That's going to be my guess. Put in the comments what your guess is. But the question is, the reason why I say that is, there has to be a price at some point in time. We saw this with Tesla. They don't do stock splits like for nothing, right? And so my question is, at what price would you say, you know what, I just can't dollar cost average into this stock anymore? Can't do it. I'm going to move my money somewhere else, right? Remember, it's a psychological thing. You're gaining no value by them coming and doing stock splits, right? But people think it's a psychological thing. They go, ooh, Nvidia 300 versus me paying 1,000. Again, it's actually the shares are more diluted because now they're issuing more shares. But again, my question is that, like, what price level you go, I'm going to go ahead and start buying AMD. I'm going to start buying this other stock and all this good stuff. Can't do it anymore. Just a question I have for you. And then, of course, what price range, if you think they're going to do a stock split, is it? Now, speaking of volatility, oh my goodness, you got to see this one. If you didn't see it, so of course that New York bank we've been talking about has been in the background. This thing's been crashing and burning like crazy. 82% in the last 21 days. But today, whoo boy, look at this thing. News came out that they need money. They need to issue shares. They need a lot of money, like $1 billion. Man, it drops like 48% in no time. It kept halting. That's what you see these gaps are. So it keeps halting. And then it halts for almost 2 hours. And all of a sudden, this news hits. New York City Bank raises more than $1 billion in equity investment. By who? Former Treasury Secretary Steven Mnuchin, of course, or his firm. And then, bam, this thing rockets up as soon as it opens back up for trading, somewhere in the neighborhood of like 120%. And, of course, some people had bought calls before it halted last for cheap. And then, of course, they made out like bandits when it opened back up for trading. I think they were able to offload those calls. But, I mean, huge things. So, of course, is this bank going to fail? Is it going to get taken over? Most likely, we'll have to see. KRE even went green at some point in time when this news came out and went back red. But, just another bank in distress. Crazy. The other one was an index, right? All of them. Every one of them did this. It's like all of a sudden you're sitting there going, oh, it's okay. We're coming back up here, this level again to retest it. And then just this very quick drop in a matter of minutes, right? 0.61% from there. But if you look at where the drop started, and my phone started blowing up at this point in time, you're looking at almost over 0.5% in a matter of 5 minutes. And all of them did it. All the stocks, everything. And I couldn't find any news on this. I was like, where's the news? Which lets me believe what happened was It came back up to retest this. You got relative equal highs right there. That was a key level because it had just got through and mitigated an RTH gap. Plus, it was at a level where the bulls could actually take back control. And then some massive orders came in to sit on the sell side and liquidated those things quickly. And so if you found any news, let me know. But no, that was crazy. I mean, all stocks, the dollar, everything just quickly. And so, that's the thing when it comes to algos. It's a matter of minutes, right, before you liquidate it. And you're like, wait a minute, what just happened? And so that was nuts. Again, still a green day, by the way. Now, before we get into the other stocks, which had great news and some of the indexes, you can look right here at the economic data, right? Again, it's not great. I mean, you got January factory orders down 3.6% month over month. They didn't expect it to be that bad. Orders, ex transportation, minus 0.8%. Didn't expect it to be that bad. Worst decline headline orders since April of 2020. And you can see by this chart. Look to the left, right? Look at 2020, 2021, and look at those orders. And then you just look to the right, and it's just ugly. You're like, good Lord, man, what is going on? And it's simple. I mean, everything is just still in contraction. Like, that's what's happening right now. The business cycle just got messed up. And the other thing, and this is maybe will surprise you, is the serious delinquency rate, which is 90 days or more, right, for credit cards, rose in the fourth quarter of 2023 to the highest since second quarter of 2011. And when I look at this chart, what I always look at is, when I was looking at it for the longest time, is just looking at what norm was from 2000, let's say like 11 to 2019. And you can see we're past that, right? So we're past that level, but we're still nowhere near as high as what you saw in the dot-com, the great financial crisis. But when you go to the little chart below, right, so the POP rate year on year, you can see that right there has passed the dot-com bubble and at the levels we saw in 08 as well. And of course, this is really important because what just came out yesterday, it was talking about credit card debt, right? All it is a straight line up, right? And so 1.13 billion. And so you can see people are just absolutely, and again, this has to do with a lot of people that are running credit cards up. They don't want to run the credit cards up. They just don't have any choice but to do it. And so, of course, when you look, that's a major problem. And so this is what you're seeing. And so when you look at serious delinquencies for auto loans, as of the fourth quarter 2023, rose about 3%, highest since second quarter of 2010. So there's another thing that's rising quickly, as you can see by the chart right there. So above anything that was the early 2000s. Again, I don't expect anything to reach the great financial crisis, just because that was a whole nother mess where the banking system was basically collapsing in front of our eyes, and the real estate market for the first time in our life was completely collapsing and stuff. Because of the crazy stuff they were pulling. Or again, it's something just to keep an eye on. So we're looking and people are saying, well, these rates aren't affecting people. Well, the truth is, please hit that thumbs up because it helps people find this video. And if you like financial content where somebody does not try to make themselves seem smarter than they are and talk over your head, please hit that subscribe button. I really appreciate it. All right, moving on. It just might not be us, but it is a whole lot of people. You might know some people, right? And remember, I've got to be the only channel on YouTube that even has told you guys that pawn shops are loving life because people are having to go put collateral up to take money out, to pay their rent, pay their car loans, that kind of stuff, right? And so they're loving business, and it kind of lets me know when pawn shops are doing really good in that regard, that yes, a certain part of society, and it sucks, a lot of times, not even their fault, by the way, this is happening, are being crushed by where rates are at right now. The credit card rates, look on your statements. They are at record high, highest they've ever been probably. And so, oh my goodness, I can just imagine. And so, and the people that aren't 90 days delinquent, trust me, they're coming up. The 30 and 60 don't look any better, right? They'll get there. But 90 days is rough. Usually when you get to 90 days, you're in trouble at that point in time. So anyway, just like to keep everybody updated on that. Put it out there. Let me know what you think in the comments. Now, when it comes to indexes and stocks, again, I told you guys, draw a trend line, draw some levels if you want to and all that good stuff. But right now, until you break that trend line, we'll put a level in here right there. It's nothing to like be sweating about. I don't mean the stock market ain't going to go down. I've been saying for a long time, are we overdue for at least some kind of like 5%? Yeah. You would think we would. The problem is, obviously, when your semi-stocks and your tech stocks keep raging and stuff, then, of course, it's going to be hard to do that. Like a CrowdStrike coming out with 25%, even though it dropped a lot, which we'll talk about and everything, but that pulls other stocks up. Nvidia, AMD, all these others pulling stuff up. S&P, again, still in this channel, Didn't break the 21 EMA right there, as you can see. You saw the NASDAQ bounce right off of it. So until, until it breaks this level for me, breaks at 21, even starts to approach that bottom of that channel, everything's normal. Still in a bullish uptrend right now. Doesn't mean, I think somebody put in the comments, oh, Mike's one of these channels, don't think the stock market can go down. That person has not been watching my channel, has no clue what they're talking about. So yeah, yes, stock's gonna go down. I've been saying it. It should. I mean, we're in that seasonality part where, yes, if you're gonna have weakness, you should start to see that. Okay, but it's just not happening right now. Are we starting into that process? Very well could be. Right. So have your list of stocks ready. Have your levels you like to buy at. Okay. Now, IWM returned to the scene of the crime. Right. Breakout, false breakout comes back down. Now we're sitting right there at those 2023 highs again. Okay. And so this one still. Nothing bearish about it. We'll see if it breaks back above this line, or was it another false breakout, which has been famous for in the past. That's what we got to wait and see if today was a lower high for a lot of these indexes and stuff. That's what we have to wait and see. Now, going over to a stock that pulled up the market. CrowdStrike, right? It kills earnings. Boom. Rockets up 25%, sells off basically the rest of the day. Of course, that drug all the cybersecurity stocks up and then drug them right back down when that sold off. But, CrowdStrike is definitely the king of cybersecurity right now. So congratulations to CrowdStrike holders. Now, Palantir has some big news today. It popped up over 10%. Why? Because they got awarded a military contract. Again, we're in a very news-driven week this week, man. A lot of this stuff's coming out. I always wonder, do they have this in their back pocket to play sometimes, or they literally just report it as soon as it comes out? Let me know if you know in the comments. Because I always find it funny when there's any kind of weakness, positive news really starts to come out like crazy. And so again, this one broke right above that RTH gap, so we'll get rid of that. We flew right through like a hot knife through butter right there. And when I go into the weekly, that level right above, you'll see way over here to the left, because it's been a while since we've been up here. That right there is that level right there from November 1st of 2021. It's been a long time. Once it breaks that around 27.14, then we'll be heading up at 29.13 if it can break that. And so again, we come back to the daily. I'll go ahead and get rid of this trend line, move that one over, because that's really what you're looking at. If this is going to come down, we see Palantir do this a lot, right? It's a high flyer, gets these big moves up on news, and then they sell it back down off that. But we'll see if it retests 25.13. If that holds and we get a bounce, then we can look for the 27 area right there on this one. Now, Target. Watch out for this one, because obviously it's had this huge move and everything moving up. Again, earnings pop. This one right here has been on this big move after getting crushed from whatever it was doing that people didn't like or whatever. But really watch this level right here around 182.06 right there. And the reason why is because obviously it's tested it 3 times in the past, failed. It's coming up there. It's pretty close to it right now. I think it's like $8 away, I believe. But when we go back to the daily, you can see right above that level is an RTH gap, right, where it gapped down on an earnings call. And so what happens when stocks break above a key level like that, maybe you get a retest, or maybe it just starts cutting through it like crazy, but it's going to be a lot easier to move through that, right? If I pull up a volume profile, you can see there's going to be a big gap there. And so again, big mover, don't expect it to be a straight line, but that will be a very, very key resistance area to watch on target for a very nice move up to continue. JD.com, Chinese stock here, reported okay earnings, but honestly, I bought a call on it because strictly from the chart. So I'm talking about, it's like Disney when I talked to you guys about it. When you got these kind of trend lines, support and resistance lines that go that far back and is that important to this one, I don't care if they got on the desk and took a dump on the earnings call. Literally, it was going to go up. I don't mean it's going to stay up, but it was going to pop today, and so that's what happened. Same thing happened on Disney, and same thing happened on so many stocks. And they get down to these crazy trend lines like that, or support lines, excuse me, I don't know why I keep saying trend lines, then, you usually do get your pop. Now, will it continue up that trend line? That's the key. It's a long way, that trend line. This thing has been just massacred. Left for dead. So, again, we'll see if that happens. All Chinese stocks were green today. Speaking of earnings, got a lot more small caps, a lot more retailers, a whole boatload tomorrow. Kroger, Big Lots, Burlington, BJ's, American Eagle. I don't think PaySafe's, I think that's a whole different type of company. Broadcom's going to be the big one because that is Apple's biggest customer right there. Costco, Marvel, DocuSign, and then MongoDB, I believe, and then Gap at the bottom right there. Watch that one. Now, when you look at economic data, we'll have continuous jobless claims, initial jobless claims. some non-farm and payroll activity. Then you'll have Fair Chair Powell testimony again, which did nothing today because they actually released his testimony around, I think it's before open. It's either between 9:30. So they release it to the public anyway. And so his testimony didn't say anything. So I assume they're going to release it tomorrow as well. And again, the market's going to do what the market wants to do with it. The algos will kick in and stuff. Because I know at one point in time when he was testifying, he did say the phrase, yes, we don't see a recession in the short term, any kind of risk for that. And we hit a soft landing. Like as soon as that came across the tape, we got a pop, right, to go up even more. And so, stuff like that's going to happen. Market's like, ooh, look at that right there. And again, I always say to myself, what do you think the Fed president's going to say? It's going to be horrible. We're going to crash and burn. It's going to be a massive recession. Come on, dude, get out of here. I mean, every time before we hit a recession, they say, no, everything's great, because they got to say that. That's how you do it. And I'm not saying we're going to hit a recession, because I do a video every month on it. So, I don't see that in the cards right now either for the short term. But the key word, what everybody missed, was he said short term, right? So, that's something you got to think of. So I hope you got something out of it. Hit that like and subscribe button if you did, and I'll see you tomorrow.